Hello, everyone, and welcome to the ML podcast. Today, we're honored to welcome Drew Clark from Summit Royalties. Drew, first of all, thank you for joining us today.
Real pleasure. Looking forward to it.
Thank you very much. And today, I'd like to structure the conversation into two parts. So, firstly, a bit about your background and leadership. Secondly, the main part of the discussion, Summit Royalties itself, the assets and what your plans are going forward. But firstly, what experience brought you to the CEO role of Summit Royalties, and why should investors trust you and your team to create shareholder value?
So I think the easiest way to answer that is to talk about my last seat, which I think gave me the credibility and the ability to raise the capital and build the team that we have. I'll go into more of my background afterwards, but I was the first employee hired at a company called Metalla. Metalla today is a $1.3 billion company. When I joined the company, it was well under a $50 million market cap. Of the 33 deals done in the history of that company, I was part of the team that did 27 of them. Certainly part of a team, but was there doing the analysis, helping fund and helping promote and commercialize these transactions. So I think that's probably why I was able to get Summit off the ground and grow it with my team. But before that, I was a research analyst at CIBC. I was an investment banker at an intermediate. I've been part of 2 exits in the space. I have a CFA, highly analytical. So I'd say the 20 years preceding Summits, about half of it, I was more in the sell side, writing research reports, doing investment banking, and the other half of it, I've been on the issuer side. So my first royalty spot was Premier Royalty. I was acquired by Sandstorm. Part of me and that management team went to a company called Carlyle Golds that got acquired by Alamos. So not only have I been part of incubating issuers, I've also been part of selling issuers to the benefit of our shareholders. So that's probably a longer answer than I meant to give, but that's a little bit about me.
Thank you very much for that backgrounds. Give us a great understanding. But for investors hearing about Summit Royalties for the first time, what is the Summit Royalties investment thesis?
Very simple. We believe that the best way to get exposure to precious metals on the planet is through a royalty and streaming vehicle. And we can unpack a lot of the reason why that is, but it is a passive exposure to a diversified basket of royalties. So we endeavored to create exposure for investors, including ourselves, to a rising gold and silver price in the best way possible, royalties and streams. So that is why Summit Royalties in a nutshell.
Thank you very much for that clear investment thesis. I appreciate it a lot. But what are the most important milestones investors should watch for the next 6 to 18 months? You could also elaborate a bit on the asset base that you have.
Oh, happy to. So we started this company roughly 18 months ago, not even 18 months ago. So without telling you the history of the company, but I think it informs what assets we have in the portfolio. We started the company by buying a portfolio from IAMGOLD for 17.5 million US. We then did an RTO with a company called Eagle Royalties that brought in 38 royalties, including the Banyan royalty we're very excited about a month after that. And then while we were taking the company public, we bought the Madsen royalty, which is owned by West Red Lake Gold, for $8 million. So we have gone from an idea to a publicly traded company in about 4 months. And I want to just really stress upon how quickly we transacted in an accretive way. And when I say accretive, the share value goes higher every time we do something. On the back of that, we took the company public, and then we bought a royalty on Newmont's Saddle North deal for, Saddle North asset for 5 million Canadian. And then we did an acquisition of a company called Star Royalties. So all in told, in less than 12 months, we did all of this, took it public, acquired 2 royalty companies, have raised over 23 million US in assets, never issued a warrant. Like, it's been a very busy year. So that's how we started the company. What we have today is a portfolio of just under 50 royalties, and 4 of them are in production. And 1 is currently in construction, and another one is about to go into construction. And what investors get today is a cash flowing vehicle that is dominated by silver and gold, almost entirely. And the growth initiatives in this company are incredible. So there's 2 assets coming online next year. One is currently in construction. That's the Copperstone mine, where we have a 4% gold stream. it is going to produce an unbelievable amount of revenue for us. That is part of the Star transaction, and that's why I gave a bit of the background before. And the other asset, once they get an installation license in Brazil that'll go into production, is the Pitangui mine, which is run by Jaguar. So we've got a awesome foundation of revenue generating assets today. We've got growth coming from two very well managed and larger companies. And what we get excited about is the quality of these operators. Because we buy third-party royalties, and I should have said this earlier, because we have historically bought third-party royalties, is a better way to put it. I'm not saying will only exclusively do it. We've been able to get exposure to $700, $800, $900 million companies that actually already operate mines. Typically in the royalty space, you get looks at smaller companies that are trying to get there. We are buying third-party royalties on assets that are in production. So if you look at our development pipeline, Jaguar is a $700 million company that's been operating in Brazil for 20 years. Obviously, there's no risk in mining, but that is lower risk growth. And then in Mining Americas Inc., some of your viewers may remember them as Minera Alamos, but it is today Mining Americas Inc. They are fully funded, permitted, and in construction. So this is lower risk growth with the best medium to get exposure to it. Your specific question before I went on this long rant was, what are some of the milestones? They're quite simple. Copperstone's going to has started development. Pitangui's going to start development. Those are the big milestones from our perspective. We haven't talked about Banyan. Banyan is an 8.5 million ounce resource in Canada. We have a 2% and a 1% on it. It's coming out with a PEA this year. Copperstone is putting out a open pit on its project, on the open pit side of the Copperstone deposit in the second half of the year. We get no value for that. We get no value for Banyan. I can keep going on and on. I know we're trying to keep this interview short, but that's what's going to happen in the portfolio. And then on a corporate level, we are ramping up marketing. We've been trading for less than 9 months. We've got research coverage coming out. We've got more deals to come. So there's going to be a lot of excitement on what we can control, which is what we do in the boardroom, what we do as a management team, and then what the assets themselves are going to do for us. So it's going to be an exciting next 12 to 18 months.
Thank you very much for that really good answer. It sounds like you're hitting on all cylinders, firing from all cylinders. Looks really good, and the upside is clear on my point of view as well. How much of the company do you personally own today? Have you bought some shares in the open markets?
I have not actually been able to buy shares. So to answer your question quickly, I own about 5% of the company. My management team and I, so directors and management of the team, probably owns roughly 12.5%. So that is a very concentrated position, considering that we have raised that much capital. We are blacked out very often based on financials and deals. I would like to participate in the market whenever I have an opportunity to. So yeah, the alignment is excellent for a company at such an early stage.
Perfect. Thank you for that. But no investment is risk-free. What do you believe are the biggest risks for investors that they should be aware of when evaluating Summit?
Well, so I'll answer the question directly. What we love about the royalty model is very simple. This is diversified. So although our market, our market cap is called 110 million US today, there isn't one asset that's carrying the day. This isn't a single asset developer. So the risk inherent in investing in a Summit is much lower risk than it would be for a single asset developer, an explorer developer. But in all mining investments, and I think I'm going on a more philosophical tangent here, you have to evaluate the jurisdiction, you have to evaluate the technical. But I think the one thing investors don't do enough is evaluate the operator. Have they been there? Have they done that? Are they competent? And that's something we really focus on. So the risks at Summit are gold gets cut in half. Some of these assets may not make enough money to stay online, but if gold gets cut in half, there's really not a safe place to hide in the mining space. From a permitting jurisdictional perspective, 85% of our assets roughly are either operating or in very strong jurisdictions. So the endemic risks to Summit, I'd say, are de minimis when you think about it from the perspective that it is, as a portfolio of assets, it's quite diversified.
Yeah, thank you very much for that, Drew, and for this conversation. I think this discussion has given our investors a great first introduction of you and Summit Royalties today. It was a pleasure to have you on the ML podcast, and I look forward to catch up again soon.
Real pleasure. Thanks for having us.